but I'm paying about the same percentage of my income to the federal government as my secretary does.
In a 2007 interview, Buffett explained that he conducted a survey among his employees, contrasting their tax rates with his own. Ultimately, he discovered that while his overall tax rate amounted to 17%, the average tax rate for individuals in his office stood at 32%. He paid lower tax rate than even his secretary. As per a White House study conducted in 2021, the wealthiest 400 billionaire families in the U.S. had an average federal individual tax rate of only 8%. In contrast, the average American taxpayer during this same period paid 13%. In 2007, Jeff Bezos, a multi-billionaire at the time, did not contribute any federal income taxes. He achieved the feat again in 2011. Similarly, in 2018, Elon Musk, the founder of Tesla and the second richest person globally, also did not pay federal income taxes. You must be wondering, how do billionaires avoid taxes? This is because income from wealth and income from work are taxed differently. Extremely affluent, such as Buffett, amass their wealth not primarily through income but through investment gains, dividends, and interest, which are subject to the prevailing capital gains tax rate of 20%, instead of the top income tax rate of 37%. There's also a capital gains tax loophole commonly exploited, known as the stepped-up basis. If Warren Buffett were to sell a stock, he'd incur capital tax based on his profit, calculated as the stock's cost minus his initial investment. However, if he refrains from selling and passes the stock on to heirs who then sell it after inheriting, they would pay capital gains tax on their earnings after inheritance, leaving the original gains untaxed. So how do billionaires sustain their extravagant lifestyles if they're not reporting income or selling their stock? For ordinary individuals, taking out loans is typically a necessity, perhaps for purchasing a car or a house. However, for the ultra-wealthy, it serves as a means to access billions without generating taxable income. For many of these individuals, rather than selling off stocks or real estate assets, which would incur taxes, and then using the proceeds for their lifestyle expenses, they opt to borrow money instead and utilize it to fund their lifestyles. Wealthy individuals find it easier to secure substantial loans from banks, particularly at remarkably low interest rates. Last year, it was also revealed that Musk leveraged a portion of his Tesla stock to obtain billion-dollar loan. Since borrowed funds are not considered income, they are not subject to taxation either. The techniques utilized by billionaires to reduce their tax obligations highlight the intricacies of the tax system and the resourcefulness of the affluent in maneuvering within it. Although some of these tactics may raise ethical concerns among ordinary taxpayers, they are lawful and frequently aligned with tax statutes and guidelines. Effectively tackling these challenges necessitates thoughtful policy measures that consider the interests of both taxpayers and society at large.